Andrew, the owner of IC, he asked me to check like who was the best system. And so I did a look, and it was just this one guy. I won't say the country, but he'd built the systems himself. You could tell by the comment field. Mm-hmm. So he'd written a specific strategy for like FX on a specific time frame. It was typical kind of like homegrown, programmer comment field. But he was the best performing, and he wasn't using high risk.
Is it true that IC Markets is the biggest Forex broker?
We do like 3 million trades a day. So we do more trades per day than most brokers would do like in a year.
Angus Walker, head of trading at IC Markets, one of the largest brokers in the world.
How do you manage this huge volatility?
We know what to do. We're well capitalized little counterparties. So it doesn't bother us if the position gets really, really big.
What's the best way for beginners to start trading?
The easy answer would be go to your website and buy like the top performing system and trade it with low risk.
Oh, an algo trading space.
If OddCAD drops 100 pips, let's say 150 pips because of a news release,
right?
Wacka is going to start executing a few hundred million OddCAD. Now, if those trades went straight to market, they would move the market like 30 points, 50 points, right? The market wouldn't absorb it. It would just go like, what the hell's going on? And for a broker of our size, we can take it.
How do Forex brokers make money?
The only ways you can make money are, that was me in 2009. So quit my job, put like 10,000 in an account. And then I was just trading at home in the basement for like, at my parents' place. If you're going to sell surfboards, you need to surf, right?
Yeah.
I would say if you want to trade with the high risk, there's a way to do it properly.
Nearly everybody blew an account at the beginning, lost some money in the crypto or in the commodities or in the stock market. So my goal with all of these podcasts is to deliver this message to the audience, how to skip that, how to immediately be the system trader from the beginning.
The best traders in the world come from China, by far.
Is there a reason for that?
They're just really smart. They're kind of like coordinated trading efforts.
What's the bare minimum amount? What's the minimum?
I think realistically, if it was like a momentum system, which had like reasonable stop loss size, they could trade.
Angus Walker, you are the head of trading at one of the largest Forex brokers in the world, and I'm thrilled to have the chance to speak with you today. We'll dive into more details about how Forex brokers work and how Forex traders can take the maximum out of the market. So it's a pleasure for me speaking to you.
Yeah, pleasure to be here. Thank you.
Before I ask you the first important question I have for you today, can you tell me what head of trading does, Forex broker? Like, what do you do?
So if we think of like the trading department in a broker, there's technology and systems, there's operations, there's risk. Some people would have dealing separate from that as well. We just include them as risk. So basically I sit at the top of that. I don't trade. It'd be too distracting. My job is to essentially run the team. So each of those are like independent teams. So I basically set the policy and oversee the team so that they can carry out everything that you need to do to run a broker. So there's like ops engineers, there's quants, and then separate to that, in a trading team, there is always kind of like the client interest and the business interest. So we have to kind of think about what do the clients want and how do we meet those needs? And then what does the business want? Business wants to make money. Clients want to make money. We don't think about the business as much as we do the client. The product hasn't really changed over the last, let's say, 10 years. You've probably seen the same spreads, the same number of price updates, the same kind of stability. So our job is to keep the same experience for clients in every trade, regardless of how many clients use like the same EA, for example, while scaling the business.
So you're between the clients and the business and try to make the both parties happy?
Yeah, well, it's because you can kind of think as those two could traditionally be like competing interests, right? We see ourselves as kind of not so much sitting in the middle, but we have to evolve the product and how we do things so that we can keep up with client demands while still meeting the businesses. Like the business has KPIs, for example. If you have a bad product, clients will stop trading with you.
Absolutely.
So the product is always first, and then you kind of figure out how to meet the business's wants.
And by the product, you mean the trading conditions that you offer
trading conditions
to traders.
Yeah, but there's just a lot that goes on behind the scenes to make sure it all works like 100% of the time. Redundancy, stability, and then trying to like add more products, add more leverage, increasing necessarily the risk.
You've mentioned stability a few times, and I assume this is one of the hardest things that a huge broker faces, because obviously it's hard to climb to the top. But then it's really hard to stay there.
Yeah.
Because I always say, even for the small...
Everyone's waiting for you to make that mistake.
Yeah.
Right?
And even if you're a small entrepreneur, or if you have a small business, it is hard to, 99% of the businesses fail nowadays.
Yeah.
It is hard, but being on the top and just staying there is even harder, in my opinion.
So I've worked in a few shops now, and I know people from all over the industry. I'd say the key difference between IC markets is the simplicity in the offering, and there isn't like a strong internal discussion on how do we make more money from clients. It's basically how do we just keep the product like reliable, good, and what clients want. So clients open an account with IC because they know they can get high leverage, tight spreads, good execution. It's all the basics, right? And that's why we are quite popular with the EA crowd. But if we spent our time thinking about how much revenue we can make per trade or per million and how we can optimize that at the expense of the client, then I think we would lose focus. So my job as trading is actually a lot easier than someone in another broker that's focused on making as much money as possible.
Yeah. Well, everything you said doesn't seem easy. But I completely hear you. And is it true that IC Markets is the biggest Forex broker for algo trading for expert advisors?
I'd say like of the brokers that report, we're definitely the largest. I think this month we'll do 2 trillion, which is a new record.
2 trillion in trading volume.
Yeah. So as we speak, we probably just eclipsed it. So it's been a big month for clients as well. They made, I think, like 83 million. So if you split the book between winners and losers, which is on average, let's say about 35% of clients are profitable in any given month. Those profitable clients this month made 82 million, which is like a record, I think. So basically everyone just went long gold. Some people went long at the top, which is unfortunate, but
it always happens.
Yeah, but it was the highest volume and the most profitable months for clients.
When you say most profitable months for clients, do you mean the profits they closed or withdrawals? How do you measure profitability when it comes to clients?
Yeah, we do mark to market. So if you split the book between winners and losers, if you just look at the mark to market, which is like the change in equity for the profitable guys, that's how we consider that. So some of them might still be holding on to gold, but we see those figures like month to date, and they're like the highest they've ever been. But to your earlier question, from the stats we hear from EA developers, we're significantly larger than the like second place broker. And I think I received a stat from someone yesterday that the lifetime value or like the survivability of clients using their EAs on our system outranked everyone else significantly.
Do you mean easy algos?
Yeah, it was Waka Waka.
Yeah, Waka Waka.
It was
before that was Waka Waka Valerie EAs, and then they created a new platform, Easy Algos. All right, we went in a very interesting direction because my first question was for all the traders, not just for algo trading, but when you say that, it is really interesting. One last thing here. How do you manage this huge volatility when there is a hype on something like gold recently? Before was crypto. There is always something on the hype, right? How do you manage so many transactions happening at the same time on one asset, thousands of people trading with EAs? How do you control that?
Yeah, it's a good question. When you get to our size, we usually have a lot of netting. So for every buyer, there's a seller. And only at the extremes do we see the book become skewed in one direction. So basically, to answer your question more thoroughly, we already have like a framework in place ahead of time, right? So we know what to do. We're well capitalized to all counterparties. So it doesn't bother us if the position gets really, really big, which it did. So that's not a problem. But we know our like clients and how they respond during market stress and and the highs and lows. And we can generally see the book, like the long short position, flip pretty reliably. I'm more concerned with things like the flash crash that happened the week earlier.
Because that was drastic.
Yeah.
That was dramatic.
But we actually managed to avoid most of it because the provider that we use restarts on Saturday morning.
Okay.
And they were offline. So it's a routine like break of trading, right? We have it on our website. It's in the platform, so everyone knows it happens. And right during that break, the market like fell like an extra, I think maybe like $10,000 in Bitcoin. So we missed most of it.
Yeah.
So our clients kind of saved a lot of money then, which was good. Generally being capitalized, and so long as you can execute a trade when markets become really stressed, so clients can always liquidate their trades, then I think you're good. And we do like 3 million trades a day. So we do more trades per day than most brokers would do like in a year. So our systems are designed for throughput. Our counterparties know how to handle large bursts of tickets. So they can handle like whatever we throw at them, they've always been able to handle it. So yeah, we've just had a lot of experience, a lot of practice. There's been a lot of risk off events, a lot of flash crashes. So we're getting better at it.
Yeah, I think so.
Yeah.
It looks so. I'm getting to my first question now. Even those topics are very interesting for me. I've never worked on the back end of a broker. I've worked for brokers, but never on the back end. And it's really interesting for me to know how that works. But let's get to what's the best way for beginners to start trading on the market based on all of the experience you have?
So I'm really biased, right? I've looked at like hundreds of thousands of traders over the years. It's probably a lot more than that. And I've seen what works and what doesn't. And the client who I would put my own money behind is the system trader. And then the discretionary trader is someone who looks good for a period of time and then blows up in spectacular fashion. But I've seen it happen more times than I can remember. So the system guys generally trade like several thousand trades per month. They've got a really sharp mean. They don't have like a really horrible left tail. So they don't have these outsized losses that'll just, wipe out half the account. They'll have the odd like really big trade that'll do well for them. But they generally have performance that you could put in front of a fund manager and they'd say, this guy is sharp. So I would encourage people that were starting out to divorce themselves from the idea of being a discretionary trader and sitting behind the screen and like buying and selling at 3 a.m. because you think you might have an edge on euro dollar. Like it's very difficult to do. I would encourage them to think about being a system trader. And then to be a system trader, there's like the easy road and the hard road.
Yeah, I was say that because if you just start, it's really hard to become a system trader immediately.
Yeah. Because you don't know the difference between like a momentum system and mean reversion, the difference between different like money management strategies and how they can influence results, or that like there's such a thing called like risk and it'll blow up your account.
Yeah.
So I would like the easy answer would be go to your website and buy like the top performing system and trade it with low risk.
Oh, an algo trading space. Yeah, that was the idea why we created it, to be honest, because we receive, if not thousands, but hundreds of questions over socials, comments, like which system to start, which robot to trade. And we were spending a lot of time answering. And then I said just to my team, okay, let's display everything we have with track records and EAs and everything public. Yeah. So people can just pick one. And really this way, the beginners can become system traders easily, because so far, most of the people that came to us were people that lost at the beginning. Yeah. The same way you say, just trading overnight and during the night, and they just lose money and blow one account, second account, bigger account, and they become really frustrated. And I honestly haven't seen long-term profitable manual traders for quite a while now. I don't know if you have, probably in the thousands of hundreds of clients you have, there are some. Yeah, I'm sure there's plenty, but would you put your own capital behind them? No. No. I would never do that. No, absolutely. Unless somebody controls them, they work in a hedge fund. But yeah, that's a hard one. For those with more experience, what should be the goal? Let's say you already scratched the surface, you already have your system. What should be the goal? To quit 9-to-5 job, to trade as a hobby or just to have fun?
That's just like the previous question. I think the first goal of trading should be not to lose your capital. So if you think of like the trading journey of not losing your capital, then you have to be a serious person and say, am I going to win if I discretionary trade? And the answer should be no, because you just don't have the knowledge. And then if I want to trade profitably and not lose my capital, how would I do it? And the answer would be like system trading. I don't see any other path that you could use, especially for a few years, because that's how long it's going to take to get up to speed. For someone that's more serious, let's say they've been trading for, I don't know, a couple of years, I would say don't quit your job. Do it as a side gig. I've seen this come up a few times now. So back to what I was saying about the really good guys have several thousand trades per month. They're really sharp, mean. Generally what they'll do as well is they'll have a portfolio of strategies. Instead of just like one EA, they'll have like several running at the same time that aren't correlated. And if you can stop thinking of yourself as a trader and start thinking of yourself as a manager, then you only have to spend a short amount of time every day to manage your account.
That's a very good point.
If you trade with low risk, then when Trump gets on the wire and says something crazy and your account loses like 5% in a day, you can stomach that, right?
Yeah.
If you trade with high risk, that happens, you lose like 30% and then you've got to make back, like 50 to be at break even. So a portfolio of strategies, uncorrelated, low risk, that would be kind of like the next step. And if you can do that for a couple of years, then I'd say it's really just how well can you scale it. If you're working on the side or still working at your main job, you can keep adding to the account, keep building confidence. And that is kind of like what I would say is the path to success.
Yeah, I also suggest something very similar to people that ask me when or how they should quit the 9-to-5 job. I'll say don't quit. Until you make more.
Well, it's very stressful,
until you
right?
make more from this side hustle thing you have, no matter if it's trading or not, right? And it shouldn't be just 1 month, because if you just make luckily profits for 1 month and you quit your job and the next month you blow your account, then you have to go for an interview, right?
Yeah. That was me in 2009. So quit my job, put like 10,000 in an account, and then I was just trading at home in the basement for like at my parents' place. I was like early 20s and I was doing that for a while and I was loving it, right? Because it was a lot of fun. I was that guy that I mentioned up at like 3 a.m. trading Eurodollar because I thought I had an edge. Over trading, over leveraged, eventually blew it up. And then I was like, what now? And that's when I joined IC Markets like in 2010 as like a salesperson. So
yeah. Well, it happened for a reason.
Yeah. So
we wouldn't be having this podcast if this didn't happen to you. But that's my point is nearly everyone I speak to went through that, right? Nearly everybody blew an account at the beginning, lost some money in the crypto or in the commodities or in the stock market. So my goal with all of these podcasts is to deliver this message to the audience, how to skip that, how to immediately be the system trader from the beginning.
Yeah, just put your energy into understanding, because I think to be a system trader, you still need to understand the types of strategies. Mm-hmm. You need to know the difference between mean reversion and why it's more like it's not an edge to be like a mean reverter in a lot of cases, right? It's like martingale.
Yeah.
You might have a different opinion, but generally, unless they have like some sophisticated volatility stuff behind them and like market regimes and stuff, it's they're prone to having like really big drawdown and blow up.
Yeah.
Momentum, kind of not trend following necessarily, but along that thread. So if they can understand that, then they can begin to understand the different types of strategies and how they can mix and match them across different markets to like build a portfolio. That still takes time, right?
What's the bare minimum amount you think? Even not just the beginners, but more experienced people who, let's say, spent a few months, a year on a demo, learning, experimenting, building a portfolio of EAs or manual strategies or whatever they found, and then they decide to go live. What's the minimum they should consider? And of course, not going to be a piece of advice to our audience, like based on your experience.
I think realistically, if it was like a momentum system, which had a like reasonable stop loss size, they could trade $1,000 account or smaller probably with a micro loss. And they would be like well within risk limits, I think. If it was mean reversion, then it would be more challenging because the position sizes get too large and you'd be risking too much of the account, I think. But I would say 1,000, you could do less than that. The less capital, the less strategies and the less trades, you would think.
Right.
Which means the more risk because the less diversification.
And you've mentioned your client's profitability, 82 million. What was that?
Yeah, so it's the average would be kind of like 35% in any given month. And if you look at like the European brokers, they generally have that kind of range, right? So it's like 60% of clients, it's between 60 and 75% of clients lose money when trading with this broker. Yeah. It's on all the advertising material.
Yeah.
So that stat I gave you, that's all like of the entities. It's not just Europe, that's all entities. So it's pretty reliable.
What range of trading accounts are more profitable? Are the small guys profitable? Those that are trading 200, or the bigger guys?
Yeah, I'd say in terms of absolute profitability, it's definitely the bigger guys. The best traders in the world come from China, by far.
Is there a reason for that?
they're just really smart.
All right.
And they love gold. And they do some stuff that might be a little bit naughty, but they're just really smart.
And disciplined, I can say.
They trade with lots of risk.
Oh, do they?
Yeah, but I think they've got like, when I say they're really smart, I mean like too smart.
Okay.
Yeah. So like almost like they're kind of like coordinated trading efforts. So yeah, I don't want to go too much into it, but they're really good. And I think when you think of like 82 million was made from the profitable guys this month, there's definitely some whales in there that contributed a lot to it.
Okay.
But again, you wouldn't put your money behind these people because if you were to ask them what's their edge, they couldn't tell you. Some of the Chinese guys are really good, but for the most part, the ones who make a lot of money, they're doing stuff that they can't explain to you because I think it's questionable.
They're just too smart.
Yeah. But then there's some Chinese guys who are just, they've got the model that I talked about. Thousands and thousands of trades per month, sometimes tens of thousands.
Trades per month?
Yeah.
Do they trade as a group? Or is it just an assumption?
No, the really good guys generally trade alone.
Okay.
Yeah, the best EA on our system, Andrew, the owner of IC, he asked me to check like who was the best system. And so I did a look and it was just this one guy. I won't say the country, but he'd built the systems himself. You could tell by the comment field. So he'd written a specific strategy for like FX on a specific time frame. It was typical kind of like homegrown, programmer comment field. But he was the best performing and he wasn't using high risk. And then the commercial EAs were way down the list. So
I hope he's watching this podcast and he will approach me so we can make his system more popular. What I've seen from the Asian guys is that I didn't know that about the Chinese, but like the Japanese, I've made a seminar, like a live seminar back behind COVID in Japan and Tokyo. And I saw some really, really disciplined people. And even today when we were walking around Dubai with my family, I saw such polite people. I said to my wife, listen, look at that. He's either Japanese or South Korea. He was from South Korea. They're just so polite, so disciplined. And I think discipline is also a very important part in trading. And obviously, when we use expert advisors, we can stay more disciplined because we trade automatically, right?
It's it's programmed into it to a degree.
Yeah.
But I think the best example I can give for like discipline with EA's Waka Waka again. So we did an analysis of their clients. I don't know if I'm supposed to say this, but I will. So it was about 50-50, the profitability for the system. So we did like all time on our brokerage at IC, like what was the profitability of Waka Waka clients? And it was 50%. I mean, like, let's just call it around that figure.
Okay.
But the ones who'd lost, they'd lost well in excess of the winners. The winners were all using the system on a low risk, and ones who had blown up, they were all using high risk.
Yeah.
So it was kind of like the system works if you give it like enough discipline and like low risk. But if you want to double your account in a year, then yeah, you'll run into trouble.
Absolutely. And even I didn't know that data yours just mentioned. I've seen it from the comments on many of my YouTube videos that I recorded, because some people just say, I blew my account.
If you use high risk and you don't have maybe enough capital.
Absolutely. So it's one and the same EA, but it really depends on how you're using it. It's just like you drive a sports car, right? You can drive smartly with 100 hours per hour and enjoy it rather than crushing it. It's the same car. So it's the same EA, and it depends really how you are using it.
And to the first question, so for a beginner, it would be easy to go to your website and buy the best performing EA. I think Biker was number 5. But ultimately, if they don't know how to tune it and they don't know that if they use too high a risk setting, they'll blow up. It's not if, it's when, right? So for a beginner to go into it with the mindset of, I'm going to blow up unless I put kind of risk first, and you kind of have to think about like survivability. And when you begin trading, you trade because you want to make money, not because you want to survive. It's not even in the frame of mind, right?
Absolutely.
So maybe people have to blow their first account before they can be like, oh.
yeah, I think so. It's the price they pay to realize that and to understand that. And realistic expectations, I think, is also very important. That's why we've made all the accounts public, so they can see exactly how much the EAs can make. But of course, if they grab it and they double the risk or triple the risk, it will blow sooner or later.
I would say there's a way to, if you want to trade with the high risk, there's a way to do it properly. And I don't know, I think you've even done this, right? So if you've got risk capital, let's say 10,000, you don't risk 10,000, you risk 1,000 on super high risk, right?
Yeah.
And then it's kind of like flipping a coin. You'll make money or lose money, but you want to give yourself 10 chances to make money as opposed to just do it all in one hit, right?
Yeah.
So that is a better way to kind of like divide your risk capital, use smaller accounts, split the risk across them with different risk settings. And that's one way to kind of program discipline, although it's not discipline in the normal sense, but we see clients doing that as well.
And just focusing a little bit more on the smaller clients, I don't want to say smaller, but just focusing a little bit more on the people that can afford, let's say, up to $1,000 account.
Yeah.
If you have $1,000 account, how would you approach to it? How would you trade with it?
I'd use momentum systems only. You make the most money from momentum. So for example, when gold goes from 3,000 to 4,000, that's gigantic, right? You can make a lot of money doing that. Can you make as much money by being mean reversion? No, right? And that probably would have, unless you had a really top strategy, that would have been really challenging for you, right? Especially on a smaller account. So mean reversion systems that trade like breakouts, they might have a lower hit rate, but you'll be able to assess the performance every day, and your drawdown will be like in a tolerable level. And you won't be in a period of long drawdown, which can obviously weigh you down. Yep. So for a small account, if you've got $1,000 and that means a lot to you, you don't want to wake up one morning and see drawdown of $200, right?
Yeah.
So that'd be scary.
Absolutely.
But if it's a momentum system, you might wake up and say, oh, I got stopped out like on 3 separate trades overnight, total risk of like $30. And it's like, okay, I can stomach that. And you'll have much more time to adjust course, adjust risk, turn the strategy off by using low risk per trade on momentum systems. And I think there's plenty out there.
It was one of the first lessons I learned in London back in the time when I was studying there. An experienced trader told me, if you don't have money, you don't have to trade every day. Even a small account, breakout system, wait for it. Even you open a trade once a month, that's okay. Grab the opportunity, use the volatility on the market, and then just pause and wait for the next opportunity.
Yeah.
But we recently had a podcast with the founder of another brokerage, and he mentioned this dopamine click that comes into trading. Just people get addicted. They like to trade, even they know it's not going to be profitable. They quite often open the trade just because they want to be in the game, right? They want to be participating.
Yeah.
And that's usually how manual traders blow their account, because they get addicted to trading, not because they're controlling the risk properly.
Yeah, I think you have to be interested in the process. With system trading, I recently tried to build a system in ChatGPT, which was, I just did it for the shits and giggles, right?
Okay.
If it worked, it worked. If it didn't, it didn't. And I wanted to test a theory that I had, because I see charts during the day, because you see stuff, right? You just have to open up chart to understand what's going on. And I'm like, oh, that looks like an interesting setup. I wonder if I can code it up. So I used ChatGPT and I could code it up, right? It wasn't that difficult. But then the expectancy of the system wasn't positive, because even if you could open the trade successfully, the management of the trade thereafter was actually quite difficult. So even if you're a discretionary trader and you want to get that dopamine click, I'm guessing when you click the button, you don't have a positive expectancy, because you just wouldn't know, right?
Yeah.
But then there's just so much more kind of like study that needs to go into the trade after that.
Yeah.
I think being a system trader makes you think about those things. And that's why I have a lot more respect for it.
And I really want to ask you one question. What is the one key piece of advice you can give to all traders? Something they will remember from today's podcast?
The most important thing is don't lose your capital. It's as simple as that. If you think about that continually and you think about surviving, then you will realize that you don't have to be in the market every day. You can take days off. You have to be picky about the setups that you go for. And if you're not picky, you will lose your capital, like guaranteed. Yeah. And if you trade without an edge, it's a guarantee. If you trade without risk, guarantee. Discipline, guarantee. So if you focus on that and know that if you don't have that front of mind, that you definitely will blow up. And maybe from a psychology perspective, that's not the right way to approach things. Like, you don't win a race by thinking about not losing, but you have to know that the market will like eat you alive if you don't focus on risk and know that you will lose everything unless you put 100% into it.
What you say just makes perfect sense to me, because what I see is usually people start trading with the only goal and desire and dream to make money, but not lose.
Maybe a better way to say you trade because you want to make money, but if you're trading to make money, then it probably won't work out for the better. So the people who are really good, they focus on the process, because they focus on if they're doing a back test, for example, they'll do it in such a way where they are very confident that it's going to have the same performance live. If you were doing discretionary trading, you're not doing a back test, presumably. So you're just winging it, and the results are going to be patchy. And I think it's almost guaranteed that you blow up.
Yeah.
But approaching like system trading with real professionalism, so that you backtest thoroughly, you know what to expect when you go live. The live results mirror what you expected, and you go from there.
That's a point we have just discussed recently with my team, and it's crucially important, because many people, they backtest the EA, they start trading, but they do not compare if that matches with the backtest, right? So the first important thing to do after a week or after 2 weeks from live trading is just compare and you see if this aligns with your backtest.
Yeah.
Anyways, you're taking the risk that the CA was over optimized for a certain period of time.
In sample, out of sample,
Absolutely. That is very important. But still, for everybody who's listening today and never tried with EAs, backtesting is not perfect. Like, there are many pros and cons, and it does not guarantee, but it is something much more that we have compared to just manual trading, right? Where we don't have backtests. It's more. It's just more.
To the previous point about the process, if the process doesn't interest you, so if you don't like the idea of doing a backtest and then analyzing the results, and then if it's your own system, you have to debug obviously, and you have to understand why it isn't firing as prescribed, and like there's a lot of nuance that goes into it, right? Mm-hmm. And if that doesn't interest you, and if the idea of backtesting in and out of sample data doesn't interest you, then I mean, system trading is not going to work because you won't apply the right rigor to it to trade with the right risk, and know when to turn it off, know when to turn it up and down.
Yeah.
So that's why it's a process. You do it to make money, but you're more interested in trading and the process behind it as opposed to making money.
Yeah, absolutely. I'm actually very happy that we are having this conversation about trading.
Yeah.
Even you work for one of the biggest brokers in the world, if not the biggest. But anyways, I see markets doesn't really need a promotion. You guys are famous enough. But I really want to ask you this question. How do Forex brokers make money really? We know spreads, swaps, commissions.
Yeah.
Is that the only way, or?
So the only ways you can make money are spreads, swaps, commissions, and then risk. So when I say risk, it's market risk. So there's always someone in the supply chain taking risk. Retail especially, right? IC Markets quotes a spread of 8 cents on gold. That's our average. The primary market is 20 cents on gold. And that's one of the reasons why the Chinese are so good, because they know they're getting the best deal in the world because they're executing on a retail spread when they should be trading on an institutional spread in the primary market, like on futures and so on. So when we quote euro dollar at 0 pips or gold at 8 cents, the only way we can do that is to take risk, because the primary market is several cents like wider. So if we were to STP trades, then you, in some cases, can be taking a loss. So generally what all brokers will do is they'll aggregate trades and then they'll hedge them, or else they'll sit on the risk indefinitely. There's different business models. The broker's risk appetite kind of determines where exactly they fit. But yeah, we generally make money. The most of the money that we make on any given month comes from spread, commission, swaps is very small. And then risk is really kind of like, how well do you want your operations, and then how much you're prepared to take.
This is the first time somebody talks about risk in the brokers on my podcast, and it's really interesting for me as well. Is that means that you are actually covering some of the spreads for the clients when you take this risk? When you quote at 0 pips, so you're taking the risk of what, covering the spread? In
general, because of our trading volume, so this month it'll be 2 trillion, and there's just so much volume on our platform going through that most trades net off like very, very quickly. It's only on like a lesser traded product, like let's say, I don't know, Euro NOK, for example, that there wouldn't be enough two-way flow and you'd have to hedge, right?
Okay.
So, and for anyone that doesn't know, hedging is simply just sending the trade to an LP.
Liquidity provider.
Yeah. So if you've got enough two-way flow, you have to go to market less, and therefore you don't need to, how do you say it? You don't make a loss by trading on the primary market. For a broker of our size, we're quite lucky in that respect. So one of the reasons why we are quite famous with the EA traders is because many brokers are kind of on the same level in terms of the conditions we offer, but we're able to offer really good pricing, really good execution. People generally know what to expect when they trade with us in terms of the execution. And that's possible because of our scale. Other brokers might have issues, and that's why the conditions can deteriorate and strategies can't scale as well. But because of our scale, it allows us to do things that others can't.
Can you explain the scale? What exactly you mean by scale?
The ability to take on really, 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 really large trades.
Okay.
Yeah.
Which are a combo of many traders.
Yeah, many traders. But then, for example, when the best example, and I'm sorry to keep bringing them up, if odd CAD drops 100 pips, let's say 150 pips because of a news release,
Right.
Whacker is going to start executing a few 100 million odd CAD. Now, if those trades went straight to market, they would move the market like 30 points, 50 points, right? The market wouldn't absorb it. It would just go like, what the hell's going on?
Okay.
And it would actually cause like, so for a broker of our size, we can take it.
Okay.
Yeah.
I got your point now.
Yeah. And the ability to kind of execute an order without creating significant market impact or stress, or us taking losses or the clients taking losses or the LPs taking losses, that's something that comes with scale.
Right.
For a small broker, they wouldn't be able to execute the trade because one, it would breach their limits at their counterparties. Two, it would breach their limits internally. And three, they probably just wouldn't have the systems to do it.
And in one of my previous podcasts, we explained what is A book, B book.
Yeah.
And we saw plenty of comments where people are in general afraid to use brokers that have B book.
Yeah.
But from what you just said, it makes sense to me that if the broker is big enough, if it is a regulated broker, it doesn't really matter what happens with my trades if they go A book, B book, as long as they are executed.
I think that's the right way to look at it. The right way is to, how long's your broker been all around for? Are they regulated? Is my money safe? Like, is it with reputable banks?
And that was my next question, actually. How people should choose brokers?
So I guess so. You kind of just focus on those things, right? And then it comes down to, okay, I've narrowed my list of brokers that I'll do business with to this. What is the pricing and execution like? And for the most part, unless it's a really bad broker, like a bucket shop, a small company, or even maybe I don't think there's too many larger brokers left these days to do things that are really bad. Yeah, I think focus on the pricing and execution, and things like A and B matter less. I know in IC Markets case, we don't look at client profitability and be like, oh, this client's A book, this client's B book. So it's generally not looked at in terms of like profit or not profit. It's kind of provide the environment that allows clients to trade and let them do their thing. And then risk and risk management is like a function that occurs independent of that, because that's governed by things like limits and policies. It's not, whether a client's making or losing money. It's like a limit-driven kind of thing. Right. And therefore it's kind of trader agnostic, market direction agnostic. It's managing the flow, like the markout profiles of clients, and then just managing limits to make sure that, I guess you're optimizing how much money you're making and how much risk you're taking. That's how like an investment bank or a really large broker looks at the world.
Right.
Yeah.
That makes a lot of sense.
Yeah. But they, you can imagine if you're, I don't know, name any investment bank, they're not profiling hundreds of thousands of clients, right? They don't know who's on the other end a lot of the time. So they just say, what's the value of this flow over X seconds, X minutes, and they'll manage it from there. So that determines how long they should hold the trade before passing it off, how aggressively they should try and get out of that risk. So most brokers have, I guess, a similar kind of worldview.
I hope many brokers will be watching or listening, so they will learn quite a lot from what you said, because I'm pretty sure the small brokers are not looking at it in this way, the way you described it, which is normal, I assume.
I wouldn't trade with a small broker, because unless you knew them really well, and by know them really well, I mean like knew the owners, knew how they did business and were very comfortable with them. But a small broker, I wouldn't trust them.
But they still have clients, right? They still catch the people via marketing channels,
I think
ads.
Yeah, I think small brokers generally do profit share deals with IBs that basically seek to exploit naive traders.
Yeah.
That's how they make money. And they make a lot of money. I don't think it's good.
I thank you for your transparency and honesty today. And one last question. When you were getting into this, what was your dream? That's a question I like to ask. And Did you achieve it? And what's the dream from now on?
So
after you lost the money in your parents' basement.
Yeah. I mean, so I'm not trading at the moment. And the reason for that is because it's too distracting.
Okay.
So what I'm doing on the side with ChatGPT, that's purely just a hobby. So I just had an idea and I had to see if I could prove it or not. And I'll still keep playing with that just because it's interesting. And it allows me to have conversations with people like yourself and know what I'm talking about.
Okay.
One thing I always say is like, if you're going to sell surfboards, you need to surf, right?
Yeah.
If you play golf, like if you're going to sell golf clubs.
Absolutely, yeah.
So if you work in this industry and you don't know like what it is that what your clients are trying to do, and you don't feel their pain points, you don't internalize that, then you're just a salesperson. And you're a bad salesperson because you don't even know the product. So that's why I still engage. I don't have any personal trading goals right now. But I mean, in terms of the company.
What's the big dream?
For
you as
we've achieved, so IC Markets has achieved a lot of what it wanted to.
Okay.
Andrew scribbled on a whiteboard in like 2013, we will be the largest Forex broker in the world.
Right.
And I remember some guests from another broker actually came and visited us and they laughed because IC Markets used to be really small, right?
Right.
Like you have no idea. It was the world's shittest office. We had maybe like 20 people, no volume, poor product, white label, everything. And so it seemed like a real pie in the sky idea. But I guess through persistence, within 4 years, we were the largest in the world. It was like that was a pretty fun ride. The last couple of years, like according to Finance Magnates, we're still very large. We're number one by volume, but it doesn't kind of feel like it. Now we're starting to put the foot down again, more focus on product. It's the first record we've had in a year. So that always feels good. Yeah, I think we want to take it to the next level. I think we're like on the precipice of a really interesting time in trading, like the convergence of AI. I don't know what's going to happen. All I know is that the volumes are going to go through the roof. I think it's basically systematize or die. And I want to make sure that IC Markets is front and center and able to take advantage of that.
I will share with you. I'll share with you why I ask this question at the end of every podcast. The reason is because my team, they always ask me the same thing. Like, okay, Petko, what's the goal for this year? What we are going to achieve this year? And quite often I tell them, I don't know. I have no idea. Let's focus on the product. Let's see what we can do and let it just happen, right? Sometimes you just let it go and it happens when you put consistency and persistence, as you said. It just happens. Let's see how far IC Markets can go and what dreams you guys can achieve. And I thank you very much for accepting the invitation for the podcast. And I hope it was useful to everybody listening today. It was a pleasure speaking to you.
Thanks for having me.
Thank you very much. Thank you. It was a pleasure.